Alright guys, welcome back to another video on the channel. Today we're going to go over calculating your DSCR so that you can do your DSCR loans right and you're not surprised when a lender gives you terms because your numbers are not what you expected. We designed this free tool called freerentalpropertycalculator.com. You can use it whenever you want, and it should give you, exactly what you need to go to a lender with so that there are no surprises when the appraisal comes back. For some of you, this could be a pretty easy exercise, and for others, you may appreciate that I'm going to explain each field. So let's just get right into it. So monthly rental income, what do you put here? Well, depending on your lender, and you should talk to the lender you're working with, this could be one of three values, the monthly rental income. One, let's say you don't have a tenant in there, or the tenant hasn't been in there too long. Your lender is likely going to use what's called a 1007, which is a rental comp form in an appraisal that the appraiser gives to the lender that tells them what rental properties in that market are renting for, and then they come up with an average based on the characteristics of the home. So you need to understand what the 1007 or market rent is for your property, because it's likely that your lender is going to use that number or a number like that, and we'll get into the nuances in a second. 2,500. I'm just using example numbers so we can go through this. Property taxes. So I'm going to talk about property taxes for a second. So you should always know what your property taxes are. If you're doing a fix and hold, I'd say 99 out of 100 times the rehab investor pays their annual taxes when they go to refinance or sell the property. They don't make tax payments throughout. That's okay. So if you're going to keep the property, though, what you need to make sure is that the actual property tax number is legit. So if you bought the home from a consumer, there's a good chance they had what's called a homestead exemption, which makes the taxes lower if you live in the property. If you're going to go sell that property, or you're going to go keep that property and refinance it, and you're not going to live in it because you're doing a DSCR loan, you're going to want to make sure that you actually understand the actual tax bill, the tax bill for an investment property, not with the homestead exemption on it. You need to understand that number. Again, we're just going to say 2,500, depending on what your market is. It could be any set of numbers. Insurance, again, ensure that you know your insurance number for a landlord policy. The lender's going to want a landlord policy, and if you did a fix and flip, or a fix and hold rather, you likely had a liability and builder's risk policy. They're different policies. They cost different. Make sure you understand what your numbers are for insurance. HOA, that's obvious. I don't really need to explain that. And then, of course, when you're underwriting these deals, you want to be conservative. So enter a higher interest rate than you're going to get, and whatever the loan amount is. So if you can underwrite this at worse numbers and it still comes out with good cash flow, then you're going to be good, when it gets going. Okay, so this is how to use this, and then you can enter your email and email this, and it'll send it all to you. So I want to talk about the monthly rental income real quick, and then we'll wrap up. So like I said, your lender's likely going to have one of three scenarios. So some lenders, they take market rent, they take the lease amount, and they take the lower value. Okay, so some lenders do that. If you've been collecting rent for 2, 3, 4 months, whatever the lender's policy is, some lenders will allow you to use 120% to 150% of the market rent. So if your lease value is a little bit higher than the market rent, you can kind of get that in for the purposes of DSCR calculations, right? I'm not aware of a lender in the market that will, let's say you had $2,500 of monthly rental income and you have a lease for $4,000. I'm not aware of a lender that'll use a substantially higher lease like that. And the thinking behind that is simply because, let's say that tenant, goes away. Now the lender's underwritten a property at some aggressive number, and another tenant likely won't come in and pay that same amount. So, that's not an all-encompassing case, but that's just the thinking behind it. And then, so we said lower the two values, a percentage higher than the market rent based on the collection. And then, there may be that 1%, whatever the amount is, there may be lenders out there that use the lease amount regardless of its relativity to market rent. And I guess one more thing here is we have an option for people who are doing short-term rentals. So we can actually use AirDNA comps to underwrite the deal if you're using it as a short-term rental. And so that can help you on those higher value homes if you are using that strategy. I think I've covered all the nuances with this. Make sure you got the right tax bill, make sure the right insurance policy is quoted, and then make sure you understand what market rent is, because a lot of lenders are going to use that, particularly if there's no tenant in there and you haven't really collected any rent from them yet. If you have any questions, you can always submit a deal to us or give us a call. Our contact information is all around this channel. Otherwise, we'll see you in the next one. Bye.